Right, so guys, I'm going to cover what the Forex market actually is. Now, the Forex market, as you guys should know, but not many people actually know, is basically what we're doing is trading an economy's currency or a country's currency against another country's currency, and how the country's currency is actually the country's currency's strength is determined will usually either be due to commodities or other financial services. Okay, so it's usually either commodities or financial services, some form of trade. Okay, and basically the currencies that we can trade that are tradable on the markets are known as free floating currencies. Okay, there's a difference between free floating currencies, which we can trade in the markets, and pegged currencies, which we can't actually trade in the markets. So a free floating currency is a currency which is open to speculation, and the strength of a currency is actually basically it's determined by the traders that are trading the markets, whether they believe that that currency should be strong or should be weak. Okay, so that's what a free floating currency is, and those are the currencies that we can actually trade in the markets. Now, the pegged currencies are currencies which are actually pegged against a basket of other countries' currencies. So, for example, the Singapore dollar is actually pegged. We actually don't know what the Singapore dollar is pegged against because they haven't given us that information, because they don't want their currency to be very volatile. Okay, they want it to be at a set rate, a set steady rate, so their economy can continue to prosper the way it is. Now, there's benefits, there's advantages and disadvantages to having a pegged currency, and there's advantages and disadvantages to having a free floating currency. But the advantage of a free floating currency for us is that we can trade it in the markets, and we can essentially make profits whether the country's currency is strong or weak. Okay, so that's essentially what the Forex market is. What we're doing is we're trading the free floating currencies against each other. So it's basically just money being circulated around 24/7, guys. And this money, which is being circulated in the Forex markets, believe it or not, is the reason why countries and GDPs and trade is formed. Without this market, because there's trillions and trillions of dollars being traded in this market, without this market, the world's financial system would literally crash. Because that means if we don't have the Forex market, that means that there's literally no trade going on around the world, and we're literally back to the Stone Age. So that is what the Forex market is. So now let me get into how to use the MetaTrader 4. Now, the MetaTrader 4 is a software which you can download for free. You can either download it through your broker, or you can download it via the MetaTrader website. Okay, it's a completely free software, and depending on your broker, they might want you to download this software through them. Okay, so when you're signing up for a brokerage, with a brokerage, please make sure that you know whether you should download it through them or you should download it for free from the MetaTrader website. Now, I use ETX Capital for my spread betting account, and I have to download the MetaTrader through my ETX account. Okay, so if you want to join a decent broker, I've never had any problems with ETX. I don't actually have any partnership with ETX, but I can vouch that they're a good trader. They're a good broker. You can trade with them, nice spreads, and you can withdraw your money very easily. And that's the most important thing, is steady spreads and withdrawing your money. As long as you can do those two things without any hassle, then you're good to go. So now I'm going to show you how to use the MetaTrader 4. So essentially, when you log in, what you want to do is go to your navigator here and right click, and you can either open an account through the MetaTrader, as you can see here, or you can simply just log in with an existing trading account. So as you can see here, okay. And once you're logged in, you'll be able to trade the various currencies. So as you can see here, guys, this is the market watch. I'll just leave it. Okay, so this is the market watch, guys, and this is where you can actually select the pair, drag it, and drop it into the window to essentially analyze it and potentially trade it. So when you're when you're first logged into the MetaTrader, you might not actually have these windows open, but usually they are. As a default, you've got 4 windows open. And when you want to change them, you literally just go to your market watch here and select the currency that you want, drag it and drop it into here. Okay, sometimes you won't actually have all the currencies available to you. And if they're not available here, the currency that you're looking for, you just right click and you go to show all. And if you show all of the currencies will now come up. Because I've already got them all showing, it's not actually changed. But it's important that you guys know that if you can't find the particular currency that you're trying to trade, okay? So now I'm going to show you how to execute a trade. When you want to execute a trade, guys, there's 2 ways to go about doing that on the MetaTrader 4. You can either do it through one click, which is here, but I don't recommend doing that, and I'll tell you why in a minute. And the other way of trading is right clicking on the currency that you want, clicking new order, and then this terminal will come up. So what you can do is set your lot size that you want to trade, okay, like this, and you put your stop loss here. And I always recommend, before you take any trade, always know where you're going to put your stop loss and have your stop loss inputted before you execute the trade. So let's say we want to take the trade on the euro dollar. We want to put our stop loss at 1.16590. So all we do is 1.16590, and we want to set a take profit. Let's say we want to set a take profit at 1.15055. All we do is 1.15055, and we want to sell it. So we just click sell. Oops, that's wrong there. Okay, what is it? 1.16590, and here one, and we want to set the take profit. Oh, this is the wrong currency. Just bear with me, guys. Okay, so now it's the right currency. Okay, so 1.16590, and we set our take profit at 1.515055, and then we just click sell. And as you can see, we're now in the trade. Okay, now this is not a live account that I'm trading, guys. I'm using a demo account for demonstrative purposes because I don't want to take a random trade just to show you with my live account. That would be stupid. So now we're in the trade, guys. And what you can do is, once you're in the trade, is manage the trade. Now, I don't recommend you guys tinkering with the trade too much once you're in it, except if it's part of your trading plan, which you should have before you take the trade. Okay, so what you can now do once you're in the trade is manage it. So if you want to move your stop loss, you can simply go to modify order by double clicking on the order in the orders terminal and going to stop loss. If you want to move your stop loss to, let's say, 1.16075. So I've got a lot of people trying to sign up, a bit too late for that. 1.16075. 1.16075, and you just modify, and where's that gone? Let me do that again. So 1.16075, modify. Make sure that it's in modify order before you do that, guys. Okay, 1.16075, modify, and as you can see, the stop loss has now moved. Okay. Now I'm going to show you how you can partially take profit. So once you're in a trade, guys, and you're in a bit of profit, as long as it's part of your trading plan to take profit at a certain area, all you need to do to partially bank profits. Now you can do this in 2 ways, but the first way is simply go to the volume area here on market execution and then adjust it. So if we got one lot here and we want to close half the trade, all we need to do is type 0.50. As you can see, now it's changed, and we can close 0.50 of the trade. Okay, so all you do is click close, and as you can see, half the trade has now been closed. Where this before was one lot, it's now 0.50 remaining. Okay, now you can also do something else, and you can actually close a quarter of the position which is now won. So a quarter of the half position which we've now got. So we can close half of the position which we've now got on. So all you need to do is then go here again and then type 0.25, close again. As you can see, we now have 0.25 remaining, and if we go to the account history, we can see the trades that we just banked. So we closed 75% of the one lot trade that we had, or 0.75, and we've currently got a quarter of the position of that one lot position left, 0.25. So that's one way of doing it. Okay, now another way of doing it is splitting your trade into increments. So let's say you have 2 take profits. So I've closed the trade now. All you need to do is click X. All you need to do if you want to incrementally enter a trade, let's say you've got 2 or 3 take profits, what you can do if you're planning to enter with one lot, all you need to do is actually click 0.50. Okay, if you want to get in with 2 positions, set your stop loss. So the stop loss was at 1.16040, so it's at 1.16040, and then you click sell, and then you'd right click and do that again. So you entered with the amount that you wanted to enter with, but you're splitting it into 2 so that you can manage those 2 trades separately if that's part of your trading plan. Okay, so as you can see here, sell, and we're now in with 2 trades, but essentially with that one lot that we were planning to enter with in the first place. Okay, so does that make sense to everyone? I just want to make sure that everyone's with us here. So let me just check the chat. So is that fine for everyone? I'm pretty sure quite a lot of you already know this stuff, but just cover it quickly. All right. So again, if you want to close this, you just click close, just click the X again. Now, please remember, guys, that I don't recommend that you guys enter with the one-click function, because when you enter with the one-click function, you have to set your stop loss after that, and sometimes the one-click function can mess up. So what you want to do is right-click, new order, and do it through here, which is far safer. Okay, set your stop loss before you enter the trade. Okay, so we've covered how to use we've covered how to execute a trade, how to log in or make a new account with MetaTrader 4, how to set your stop loss, take profit, and how to trail your stop loss. Okay, so now I'm going to show you how to use the various analytical tools on the MetaTrader 4. Now, essentially, all you need is this toolbar here, this toolbar, and this indicator toolbar here. Okay, so that's essentially all you need when you're analyzing the chart on the MetaTrader 4. Sometimes you won't have all the analytical tools that you want on the chart, or the drawing tools that you want on the chart. All you need to do is just right click on the MetaTrader 4, go to customize, and you've got a whole bunch of other drawing tools here that you don't currently have. The rectangle and the ellipse won't be on the MetaTrader 4, and neither with the Fibonacci expansion. Okay, so what you need to do is essentially, so it would be, look, let me get rid of these just to show you. So all you need to do is go to the rectangle tool, insert it, the ellipse tool, insert it. Okay, I'm going to show you why we use those tools in a minute. And then we click close, and then it's all going to be here for you. Okay, so as you can see, we've got the rectangle tool here, which we can use to identify areas of support and resistance, and I'll show you how to do that. We've got the ellipse tool if we want to highlight a certain area. We've got the trend line here, and there's actually 2 ways that you can use the trend line on the MetaTrader 4. So if I was to just draw in the trend line here, as you can see, I've got mine like this, but it's not, this isn't the default setting for the trend line. The default setting for the trend line would be the ray would be clicked, and it would just be expanded throughout the future of the price action. Now, I don't really like that, but some of you might like that. I like to just have my trend line as far as I want it. So all you need to do is right click, go to the parameters, click ray, and now you can just adjust it as you like. Okay, so that's the trend line. You've got your horizontal tool here, which is the vertical line here, which you can use to highlight areas where you see the price turning, or if you want to just know the time and date of a certain price very quickly. Show you how to use all that in a minute. You've got your text tool here, where you can actually annotate your chart. If you want to label your chart something, you can do it through here. Okay, I'll show you how to use all that in a minute. And you've got your indicators here. So you've got your trend indicators, such as the moving averages, the Ichimoku, the parabolic, the standard deviation. You've got your oscillators here, which is for your RSI, your relative strength index, your momentum, your MACD, and commodity channel index. You've also got your average true range here, if you want to know the true range of a certain pair within a certain time period. And yeah, I don't really use any of this stuff. I simply just use indicators for trend and oscillators. So that's just what I use. I'll show you how to do all that in a minute. So now that I've covered how to set up your MetaTrader 4, let me just check the chat. Okay, cool. Yep. Yeah, so it's very, very simple, Basnati. It's very simple to set yourself up. Right, so what I'm going to go into now, guys, is how to actually read a price chart. Now, the best way to read a price chart, guys, is using the candlesticks. You can actually set your chart for the bar graph, as you can see here, or you can even have it on a line chart. I don't recommend you use the bar graph or the line chart. The best way to read price action is using the candlesticks, simply because it actually gives you a true representation of the price at that particular point. We have a lot more data available to us when we use the candlesticks, and we can actually use the candlesticks to form high probability trading decisions just off the candlesticks alone, particular candlestick formations. Okay, so I'm actually going to show you how to read a candlestick now. So basically, let's go over this. So basically, what a candlestick represents is the open. So this represents the open of the price. Okay, because this red bar represents a down candle, meaning that we're bearish. There's various words to say down in the Forex markets. You can say bearish candle, you can say a down candle. So don't get confused, guys. It's just in the Forex markets, they like to name things a bit differently just to confuse you when there's no really any reason to be confused. So this represents a bearish bar, i.e. a down bar. And what it means is that price opened at this point here where my horizontal line is. It reached this high here at the top of this candle wick. So this is known as a candle wick, okay? And then it shot down, okay? It reached this low here at the tip of this wick, and the price closed at this point here, okay? So what this essentially means is that sellers were in charge of the market at this particular point, and this is also known as a bearish engulfing bar. Now, why is it known as a bearish engulfing bar? Because it's simply because you can simply fit the previous price candle within the body of this particular price candle. So that means that it's a bearish engulfing bar, and what a bearish engulfing bar represents is seller strength, i.e. bearish strength, i.e. a potential reversal. And as you can see, when we got this bearish engulfing bar here, guys, we began to drop, we pulled back slightly, and then the price continued to drop all the way down. And from here, well, let's say you entered around here, from here to here is about 147 pips. Okay, so that's what you could have banked if you entered off the bearish engulfing bar. Okay, now what this actually overall, we've actually got a candle formation here. Okay, so this is this is known as a 3-pin bar, 3-pin pattern, or known as an evening star. Okay, there's two ways of calling this particular formation. So it's either an evening star, where we've got 3 candles which open and close relatively close to each other. We've got one doji in the middle. This is known as a doji candle. Okay, and then we've got the bearish engulfing bar. Now, with an evening star, you don't have to have a bearish engulfing bar, but most of the time it is a bearish engulfing bar. But this particular formation is known as a 3-pin pattern or an evening star. So if you guys want to note that down, and a 3-pin pattern or an evening star represents a potential reversal in the markets. Okay, so as you can see at this point here, we were going up. When we got the evening star on the 4-hour time frame, we began to drop down. Okay, does that make sense to everyone? Cool. Okay, so let me go over candlesticks one more time. In the evening, the sun. Yeah, basically Mikadas. So as you can see here, just to go over the candlesticks once again. So at this particular bar, guys, we opened here, we reached this low, the bottom wick, we reached this high, and then we closed at this point, which then led to the next 4-hour candle, which opened here, reached this low, reached this high, and then closed at this point here. And then this is bearish candle. We opened here, reached this high, reached this low, and we closed here. Okay. Cool. So that's basically how to read the price candles. Okay, this is how to read the price charts. Now, when you start off using when you start off analyzing the charts, guys, the most solid time frame to make trading decisions off is the 4-hour time frame. That's what I like to make my trading decisions off. I also use various time frames to analyze the charts. However, the 4-hour time frame is the most solid, and you get the most solid moves off that. Anything lower than the 4-hour time frame can be susceptible to noise, and the price structure is actually not as solid as the 4-hour time frame. So for high probability trade decisions, guys, you are best using the 4-hour time frame. That doesn't mean you can't use the daily and weekly and monthly to analyze, or even the 1 hour. However, if you're looking to make trading decisions, the 4-hour time frame is the best way to go.